Welcome back to Investing Talk Podcast.
Today we're looking at BWX Technologies.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. When we're looking at this,
$7.4 billion. And the growth on that figure it's just wild.
it's astonishing. That figure is up 119% year over year.
119%. That's not just acceleration. That's like a paradigm shift. What on earth secured that kind of jump?
It was almost entirely anchored in their core business, the U.S. Naval Nuclear Propulsion Program.
The really critical stuff.
The most critical stuff. Back in July, they locked in about $2.6 billion worth of new contracts.
Wow.
Just for those naval reactor components. And that single win, it extends their revenue security deep into the next decade.
So it's basically a buffer against any kind of short-term budget chaos. The future looks secure. But can they actually execute on it? What did the last quarter's numbers look like?
They absolutely confirm execution. In Q3 2025, revenue hit $866.3 million.
And that's a 29% increase year over year.
A 29% jump. For a company in these kinds of specialized, complex sectors, that's a huge number.
It's massive.
Yeah.
So where is most of that growth coming from? Is it just the core naval business kicking into high gear, or are the new acquisitions already paying off?
It's a combination, but the primary engine is still government operations.
Okay.
That segment brought in $616.7 million, so up about 10% year over year organically.
And that's fueled by what? More naval components?
Yep. Increased production of naval nuclear components, but also the integration of the Aerojet Ordnance Tennessee acquisition, AOT.
Right. Let's pause on AOT for a second, because buying a munitions company, how does that reinforce a nuclear story?
It's a really strategic fit.
Yeah.
AOT brings this specialized manufacturing IP, these capabilities in defense munitions.
Okay.
So while it's not naval reactors, it expands their footprint into other highly technical mission-critical components. It's a smart diversification.
And all that performance, it obviously flowed down to the bottom line. There was an earnings beat, correct?
A crucial one, yes. Net income rose 18% to $82.2 million. The adjusted EPS came in at $1. And the consensus was, what, 85 cents?
So a significant beat.
A significant beat. Revenue and earnings both beat the street. That's the definition about performance right there.
So you've got the Q3 beat, this massive backlog, and these deeply entrenched defense contracts. How is management feeling about the near term?
They're clearly very confident. They actually raised their 2025 guidance for non-GAAP EPS.
To what?
To between $3.75 and $3.80. And looking even further out to 2026, they're guiding for low double-digit to low teens adjusted EBITDA growth.
So they see this acceleration phase continuing.
They do. And that confidence, it really brings us to the whole idea of their competitive moat. I mean, how do they secure a $7.4 billion backlog without someone else trying to steal it?
What makes them so hard to replicate?
The moat here is it's probably one of the strongest in the entire industrial sector. It's all about regulated, mission-critical nuclear IP and credentials.
They're basically the only game in town for the U.S. Navy.
Essentially, yes. A trusted, near-sole source supplier of naval nuclear reactors. You're talking about decades of safety records and proprietary tech.
Right. And the barriers to entry.
Yeah.
They must be almost insurmountable. Why is it so hard for the Navy to just switch vendors?
Well, it comes down to incredibly high switching costs and these just extreme certification barriers.
Okay.
If you want to supply parts for a nuclear submarine, you need decades of certification, top-level security clearances, specialized facilities. It becomes practically impossible to switch.
So their position is entrenched for like half a century.
Potentially, yes.
Yeah.
But here's where it gets really interesting for growth investors.
Go on.
They aren't just sitting on that naval work. They're actively pushing into advanced nuclear solutions. This is the pipeline for future commercial growth.
And we're seeing real progress there, right?
We are. We're seeing concrete movement. For instance, they're making major progress on TRISO fuel deliveries.
For the Army's Project Pele.
For Project Pele, exactly.
Okay, you have to break down TRISO fuel for us. Why is that a big deal?
So TRISO fuel is key because it's this incredibly durable, high-assay, low-enriched uranium fuel. It's encapsulated in these protective ceramic layers.
Making it safer.
Much safer, and essential for the next generation of small, mobile microreactors,
Mm.
like Project Pele, which is all about getting reliable power to remote military bases.
Hmm.
This company is delivering that fuel.
And the most recent win, that really cements their leadership in the next-gen commercial space. I'm talking about this small modular reactor news.
Absolutely. An SMR is a factory-built smaller reactor that can be deployed way faster and cheaper.
Right.
And it was just announced that GE Vernova and this company are partnering to build one in Tennessee.
That is huge news. And this isn't just some pilot project built on a hope and a prayer, is it?
Not at all. This project is backed by a $400 million commitment from the U.S. Department of Energy.
$400 million. So that's not just cash. That's the U.S. government saying, this is the technology we are betting on.
It completely changes the risk profile. It's a massive validation.
And their expertise is also getting noticed internationally, too.
Yes, it is. They have a decade-long owner's engineer role for the Kozloduy expansion project in Bulgaria.
The owner's engineers.
Yeah.
So they're basically guaranteeing the whole project works as specified.
Exactly. They oversee everything. It just shows their credentials translate globally well beyond domestic defense.
Okay, so let's pivot a little to financial health. Because sustaining this kind of growth, it takes capital.
Right. They have massive contracts, but those projects need to be funded.
Management keeps emphasizing healthy free cash flow, even with this big revenue growth. That signals it's all internally sustainable.
Good. So growth isn't starving the company of cash, but they have been spending about $625 million on M&A in the last year. That's a lot of money to deploy.
It is.
Are we sure these acquisitions won't distract them from the core naval mission, especially with that huge backlog they need to deliver on? That's a fair question. But management argues these acquisitions, AOT for munitions and Connectrix for nuclear services and medical isotopes, are very targeted.
They're not just buying revenue.
No, they're deepening their expertise in areas that directly reinforce the core franchise, like medical isotopes, for example, that leverages their nuclear handling skills to open a completely new high-margin market.
Okay, so the M&A is designed to reinforce the moat. How are they prioritizing cash flow now?
It's going to three key areas: expanding capacity for the backlog, R&D for advanced fuels, and more of those selective bolt-on acquisitions.
All high-return uses in the middle of this nuclear upcycle.
Exactly.
So to sum up the M&A logic, the massive backlog de-risks the balance sheet, which lets them make these targeted investments for future growth.
That is precisely the structural advantage they've built. And moving on to the technicals, well, the market is certainly reflecting all this strength.
Yeah, the chart looks powerful.
The stock just hit new 52-week highs, around $214. It's a very strong momentum-driven uptrend.
And the returns really speak for themselves. The year-to-date share price is up around 56.7%.
Yeah, investors are clearly rewarding this whole acceleration story.
So when a stock breaks out like that, the big question for you, the investor, is where do you buy a potential dip? What's the support level?
Well, the chart gives us a pretty clear signal that prior resistance, the zone it had trouble breaking through.
It was around that $200 to $205 range.
Exactly. And in technical analysis, that prior resistance is very likely to flip and become the first technical support.
So that's a clear zone for a buy-the-dip strategy if we see any profit-taking.
It is. And looking at sentiment, it seems overwhelmingly constructive, right? Analysts are catching on.
They are starting to. Overall sentiment is bullish. We've seen firms like Truist Securities raising their price targets.
And what about the big funds? Is institutional money flowing in or out after a run like this?
We're seeing mixed flows, which honestly is what you'd expect after a 56% run-up.
Some taking profits.
Exactly. We've seen some new positions being initiated, but that's balanced by other institutions trimming their holdings.
Okay.
To me, that just looks like classic profit-taking, not a sign of any fundamental concern.
Okay. So we have incredible fundamentals, massive visibility, a widening moat, and a strong technical picture. This brings us to the most critical risk.
Bear case.
The bear case. Why shouldn't someone invest? And the biggest challenge, as always with these names, is valuation.
It's the sticking point. The stock trades at a pretty substantial premium. How does it stack up against its peers?
Well, it currently trades at a premium valuation, sitting at roughly 52 times earnings.
52. That's pretty high compared to the U.S. aerospace and defense sector average, which is closer to, what, 37?
37.4, yeah. So on paper, it definitely screens as expensive, unless...
Unless those advanced nuclear projects, the SMRs and microreactors, drive even faster growth than what's currently baked in.
Exactly. So we have to ask the $7.4 billion question. Why is the market paying 52 times earnings for this?
What justifies that premium?
I think the market isn't paying for a generic defense contractor. They're paying for unique nuclear exposure for those non-replicable regulatory credentials.
And for the certainty of that backlog.
And for the certainty and the duration of that massive mission-critical backlog. The market believes the E in the PE ratio, the earnings, will grow fast enough to justify the high P, the price.
Okay, so beyond valuation, what about external risks, like policy changes or budget cuts, given how much they rely on government contracts?
That's a real risk. They are heavily exposed to U.S. defense and nuclear budgets. Any major unexpected pullback in federal funding could absolutely pressure those long-term growth assumptions.
But what are the mitigating factors there? Are the current macro trends helping or hurting them?
The current trends are overwhelmingly in their favor. We're in an era of great power competition.
Which means higher defense spending.
Right. And there's this huge focus on energy security and decarbonization. These forces structurally favor higher nuclear and defense spending, not lower. So ultimately, the thesis is that this is a rare, high-moat platform. It's positioned right at the center of the nuclear defense cycle and the advanced reactor cycle.
And the growth seems very durable.
Highly durable.
Right.
Which makes this a compelling multi-year opportunity, especially if you can get in on a pullback to those support zones we talked about.
You know, what stands out to me the most, and what the market might still be underestimating, is that SMR partnership, backed by the Department of Energy.
Yeah.
If that first project in Tennessee proves to be commercially viable, it's not just a U.S. story anymore, is it?
I completely agree. And that raises a really important question for you to think about. If that model is successful, this standardized, government-validated, smaller reactor design, how quickly will allied nations adopt it?
It could unlock an explosive new international market.
An international market that could be exponentially larger than the domestic pipeline alone.
That is definitely something for you to consider as you review your own portfolio. Thank you for joining us.
And remember to subscribe for more expert analysis.